Trader Tim bringing you another Monday market analysis. Today is Monday, December 8th, 2014. And while it may not seem like it, the last week a lot has happened in the market to really give us a strong conviction one way or another on which way this trend is going to resume. So in the last couple of weeks, we've been talking about the 2100 as the target on the E-mini S&P, and as we can see here, the last 2 weeks, we've pretty much gone straight sideways. We had 2 days of pullback, a little bit of a drift higher, and then the big sell-off, or rather big sell-off on Friday. Now, the conviction that I need, or the follow-through that I would like to see, is either a break of 79, and if we can break 79, then the next either within that move or in the next day or two, or a couple of days, I would expect to see a move to 2100. If we can break the low of 2048.25s from the 1st of December, then I would look for us to move down into this 2005-ish level on the S&P, and that's just kind of back here, the prior support where we moved sideways back in September. And the reason for this is because right now there's a lot of people that are kind of not necessarily waiting on the sidelines, but waiting. They have positions that they're waiting to either add to or close. And so if you're long right now, and we start to break lows, most notably this prior swing low, there's going to be a lot of shorts that, or there's going to be a lot of longs that end up getting stopped out or closing out the position, and that should move the market quickly lower. If we can break highs, break this 2079, there's bears up here that have been pushing the market, coming in and selling and shorting the market up here at highs, seeing as we're right near this right now double topping. And so a bear would come in and look at this prior high and look to get short, and right now their positions are, they're holding. We haven't really broken out any significance. So right now we've got shorts at highs and longs from down below that, especially going into the end of the year, a lot of people are going to want to close those positions into the end of the year, and certainly close a position net positive. So because of this sideways action, it gives us a very strong identifier at 2079 and then at the low of 2048.25s. If we go over to the SPY, you can kind of take a look at the volume. The down days have seen stronger volume than the up days. If we look at the Dow, the Dow is a little bit stronger, or actually the Dow is much stronger than the other three indices. The Dow is actually trending higher. The S&P, as we just saw, is kind of moving sideways, and then the Nasdaq and Russell are actually moving to the downside. The Nasdaq is put in a lower high and already broke this prior swing low rather, on stronger volume. And then the Russell, which normally leads the market, the small caps, has kind of put in a head and shoulders almost, and we're just about, we've got the left shoulder, the head, and now we're forming the right shoulder. And if the Russell breaks down below the swing low intraday, I would certainly look for the other markets, especially the S&P, to follow. The other thing that I want to touch upon is the market profile. And the market profile is something that I've been using for quite a while, and I actually did a webinar. I really haven't talked about it a whole lot, but I did a webinar on it last week that is in the members area of the E-mini Mind blog. And I just wanted to go back to last week, and so I just have the start of December's profile up. And essentially what the market profile does is it helps us kind of organize the price data throughout the day into a little bit more visual medium. and then it can help us identify where the market traded throughout the day and where was kind of that equilibrium point. So going into Monday, I'm not going to get into too much detail specifically about market profile. If you want to find out more, you can check out the webinar, and I'm actually putting together a blog post as well. But in the meantime, last week we opened up market with the gap down, and then midweek, Tuesday, Wednesday, Thursday, we trended higher Tuesday and Wednesday, and then we went into a sideways pattern in the middle of the week. We broke out on Friday to new highs, but you can see how the market profile, so the value area I have highlighted here with the darker prices and the vertical line, the value area was essentially moving sideways middle of the week, and in order to get a really strong breakout, I would like to see the market break out of value area and not really trade within it the following day. So Thursday, value high was 73.50. Well, Friday, we didn't trade much higher than value high. We kind of stayed around, the upper value high, a little bit higher, and we just broke out of the prior day's highs just barely by a point or so. And for a really strong day on the market, let's see if I can do this here. Insert. If it was a really strong breakout, it would look something more like this, where we have value of the previous day that doesn't really overlap value of the next day on the breakout, and the point of control is above the highs of the prior couple of days. So that being not the case, and if I bring it back, being the case that the value is overlapping the previous day, as we come to today, you can see Friday's value area, and then today we had a double distribution day moving lower, and so we have a very wide profile. So tomorrow it would be very common to see a very tight range day, somewhere kind of down in lows in this region, or else another large trend day lower. So using the market profile, it can kind of help us give a better sense of how strong the trend actually is. When we look at the chart, it can give us a good indication of what the broader market's doing and how that can relate to individual stocks. But looking at the market profile, it's kind of a way to get a look inside at some of the intraday price action, without getting too caught up in the ups and downs. So it kind of helps organize the data intraday into a way that we can kind of look at it from up above, kind of still see the forest and not the individual trees, but it just helps us give a better sense of how strong is this breakout. Are we actually breaking out? Is there momentum behind this move? So currently I'm seeing as a potential failure of this trend and potential for us to not get to 2100. So the deciding factor will be if we can hold this low of 48.25s and break out of 79s, then I would definitely see us moving to 2100s. If we sell off and we break 48s, then I would look for us to come down to this kind of E-mini S&P 2000 level, and I would look for that to be very quick, and then still in the month of December, kind of maybe 3 or 4 days right down to the 2000 level, and then a rip, or at least a temporary bounce, some sort of a bounce into the Christmas holiday. So that's what we're looking at in the next week. Again, a lot of traders kind of wrapping up for the year and looking to kind of close out and manage the positions that they have, as opposed to starting new positions. So just keep that in mind. There's no need to go crazy here in the last month of the year, and trade smart and remain patient would be my my words of wisdom that I would leave you with today. So if you have questions, or you want to talk about anything specific to your trading plan, or kind of goals for next year, feel free to shoot me an email, tim@eMoneyMind. I'd be happy to chat with you. Thanks a lot, and we'll talk to you soon.